Traders, welcome to our new webinar. We are live. It's November 24th. Are we live? Is anyone here? In chat box here in YouTube. Let me check if everything is fine. Or let's wait more people to join. Hey, Anas is here. Hundreds of protesters is also here. Okay. Thomas is here. Hey Thomas, how are you? All fine. Okay, so before we begin, I just want to let you know that it's Black Friday week, so I know that a lot of you were waiting for this special offers. So as each year we offer a discount on a yearly membership, and also new members will get Elliott Wave educational videos absolutely free. So if anyone is interested for our analysis and more detailed analysis, obviously for premium members, then of course make sure to visit our website. Also, let me not forget to mention that Eightcap is sponsor of our webinar. So if you're looking for a new broker or a switch, or just you can claim 30% deposit bonus, or maybe even qualify for a free TradingView access for 1 year. Okay, so as you know, stocks have seen some risk off last week, but then on Friday, when I also published the video and sent out the video newsletter, I think on Saturday, we focused on some key important levels. So we said that despite this drop on the S&P 500, we are still seeing market coming into some very attractive, interesting level. And as you know, we have seen a retest of this October 10 swing low. As you know, there was a futures gap on down there back then, and it's not really surprised that market reversed into that zone, and now it's trying to stabilize. So a lot of traders might have been liquidated. Why? Because on Friday, when this sell-off occurred, a lot of traders exited their longs, but then when market rebounded, they re-entered, and most likely a lot of stops have been placed just below that or around that level. So now when we were tracing back into that area, as I said already a few times, that if we are really going to see more upside, then that's now the final supports that we should hold. Okay, so always the previous fourth waves are the whole area of the previous fourth waves is definitely very, very important. So I think that we could see some rebound, and the question is how strong can be the rebound. Keep in mind that for now I'm looking for a diagonal here in wave C. So possibly we'll see a strong push to the upside, maybe, or maybe we'll just have to wait on some December rally. But I think that upside will show up. But keep in mind that also some kind of a diagonals usually can occur also at the beginning of new trends. Okay, so in such case, what if we get only wave B, wave 2 rally? That's also something that we will have to consider, especially if in this next phase the price action will be more slower rather than very strong and bullish to the upside. But even this suggests that we could retrace into that area. So I think that we could stabilize, and of course one of the reasons for this stabilization came after Fed Williams dovish comment. He said that the next rate could still be lowered. So that's why they are trying to, maybe with these commentaries, they try to support the markets, because they obviously see what's going on the markets and what everyone thinks about the valuations on technology stocks. So of course, so far we have seen a very nice rebound, and I think that it will get more upside here. That of course dollar could see more downside. It basically, despite this drop here, dollar was not up that much. Okay, we have seen some moves higher, but not that much across the FX charts. And also we have plenty of important data still this week. Firstly, we will have, as you know, Aussie inflation data. Then we have rate decision for Kiwi. Then even US core PCA, which is probably the most important inflation data for the Fed. And also then we have Thanksgiving on Thursday. So keep in mind that if we'll see any kind of interesting moves, flows, it should be in the first half of the week. Okay, in the second half of the week, trading conditions could be very thin, and maybe not that lot of opportunities either. So stocks, I think that for now still is looking good. Also, I want to look at the put call ratio here. You can see in the top I have the S&P 500. Here at the bottom we have the put call ratio. It's actually inverted scale, so that it's much easier for everyone who is watching this analysis for the first time. It would be much easier to understand. So if we see a spike on calls, meaning, because that's an inverted scale, if you see spike to the upside here, it means that there are a lot of traders looking to buy this market. Okay, and if you see spike, it means that there is extreme of optimism. Market could do the opposite. So it's the same thing on the downside. If you see a lot of puts, okay, then buying puts, then it means that market is worried that market will continue to the downside. And if that data goes to extremes, it could show us that we are basically moving into some interesting support. So and here at the top I have the moving averages of this put call ratio, inverted scale, and you can basically see that we didn't had any real spikes lately. Okay, but still market is just and when looking at moving averages, we're just testing the ceiling here. But if we try to recognize the potential stabilization, then rather than zooming out and looking for the big cycles, which would be at the upper side of extremes or lower side of the extremes, which is usually clearly not the case right now. So if you want to focus on more closer trends and price action, then we have to zoom in, right? So with zooming in, I want to look at the average of these put call ratio readings, and you can see here that we had some moves to the downside. Okay, so it means that there were some puts that market was buying lately because they were concerned that market could continue even lower. Especially there are a lot of traders, investors that are trying to hedge their longer term portfolios with this kind of activity. So we have seen some extremes, and now we are trying to stabilize here. So maybe that's the perfect timing when we could see another final push to the upside into that fifth wave, and maybe we'll really get that as I said, that wave 5 push to the upside, maybe some December early. But as I said, maybe there will be only wave B or wave 2 recovery, but still there is some chance for more upside. Just a second, please. Okay, so for now, as I said, levels are holding up pretty well here after this rebound from that futures gap. Put call ratio also signals that we could be seeing the next push to the upside here. So on top of that, what is happening with the dollar? So the dollar will ideally see, if we really are headed back for a risk on mode, what you would normally expect is that the dollar will see a push to the downside, right? For now, we are still testing these major resistance levels here, which is not being broken yet. And ideally, we will see some kind of a pullback. I'm not sure again if we'll get a wave 5 drop or maybe wave 2 retracement from that levels. But for now, the important is what's going on with treasuries as well. And if you look here on treasuries and maybe compare all of them three together, meaning the dollar at the top, you have the treasuries in the middle, and you have the S&P 500 at the bottom. You can see that treasuries here move to the upside with the S&P 500 on Friday, and that's exactly because of that comments from Fed Williams, dovish comments. Okay, so it's really important to understand what is driving the market and what is behind the move. It would be totally different story if you would have yields or treasuries completely diverging from the dollar or from the S&P 500. So for now, it looks like that if the main story for this week, based on the data, PCE data that we will get in the mid of the week, will be that maybe the Fed is really going to cut rates still. There could be, who knows what the numbers will showing us. Then of course we could possibly see that yields will continue to the downside while the stocks could rebound, and also this could then later on cause some retracement here to the downside away from that diagonal top formation to the downside on the dollar. Okay, also if we take a look on the treasuries wave counts, still maybe there is a chance, the final chance, that we will get a retest of that April 2025 highs. From an Elliott wave perspective, the ideal scenario obviously is that we will complete this ending diagonal here for wave C at that area between this April spike high and this September 2024 highs in that area. So that could obviously, if that would be the case, and if we'll see US treasuries moving to the upside based on rate cut expectations, and then obviously the dollar could also turn to the downside, while the stocks obviously should hold the support. But if some unexpected real bad data will come out that will show us that economic activity is really worsening in the US, then of course stocks will come to the downside with the US yields, and then this would be a different story for the dollar. But for now, everything, I mean, it makes sense what we could expect and see on the dollar based on the S&P 500. Now also, if we take a look here on the euro dollar itself, I mean, when it comes again for potential trading ideas, is if we really think that dollar could see some push to the downside, well, looking at this wave count itself, it's very tough to read, at least at this stage, because there's a lot of different scenarios valid and possible. But what is important and what caught my eye recently is that this clearly looks like an overlapping movement, but I'm not really convinced that we have seen a low of wave C, because this drop is quite strong as well. So maybe we get some different flows this week and maybe start to stabilize in the second half of this week and maybe look higher for a wave D rally. But when it comes to trading, definitely not the pattern you would want to look for potential trades, not at this stage. Also looking at cable, this one is not showing any kind of a bottom yet. We are most likely still stuck in this triangle range. I'm looking for a fifth wave to the downside that could complete the higher degree ABC setback then. So for now, if someone is bullish on the dollar, then definitely cable is maybe something to watch for, especially while we are trading below 1.3250. That could make it an interesting bearish case. Also looking at Aussie, this one I always have this one on the watch list, especially if there's any kind of price action that or intermarket analysis that suggest that maybe we could see a rebound on stocks. So because I know that Aussie, even if at some periods it will look very weak when you see the risk off modes, then commodity currencies, when this cycle turns, commodity currencies tend to be still very strong. So I'm looking at few of them and think that Aussie could be still very attractive and interesting in that area around 0.6400 area, because notice that we came out of this recent consolidation from a triangle. So I think that that bears could come to an end into that area, especially as I said, if stocks will really hold the supports that we discussed earlier and potentially even try to drive prices higher, then I think that Aussie will also see a rebound. But now from a trading perspective, what would I have to see is maybe if we get some kind of a 5 waves up, and then obviously you would try to buy the pullback, because buying the market right now, right here, it's still a bit dangerous, because there's plenty of room for more weakness to retest the lows, right? And then invalidation level or your stop losses should be far away. So maybe it's much more appropriate and easier to find the easier trade if you just simply wait on a rebound and wait on a bottom, and then seek entries on a pullback. Well, you will exactly know where to put the stop loss, because for now you never know how far and how deep this correction could actually extend, especially if stocks will continue to risk off mode. Also looking at Kiwi here, maybe this one is the most important, what's going on a here on a if you zoom in a little bit. So this could be again a wedge formation ending diagonal, but again, if you're trading, if you're looking for potential trades here, you would want to see a break out of this pattern. Okay, and ideally closer move to this previous fourth wave would make this this pair very interesting for potential trade setups on the long side. Even if I'm wrong here and market just moves sharply to the downside, so what? I'm not looking for any kind of a trades at this stage. For me, the important is that I try to discover and find a clear Elliott wave pattern, and then if I get a lot of evidences, a lot of confirmations that this formation is valid, then I may look for potential trades. Okay, because at this point, unless the market turns higher, I certainly have to accept that I can be wrong. So I rather will not touch it here, because we never know how far this thing could go, especially if you don't see an impulsive activity away from that lows. Also, Euro Aussie or maybe some crosses could be interesting to watch, especially in the risk of strong risk off moves, strong risk on moves. This could be also very useful trading instruments. But if I think that, of course, that stocks with this recent retracement that we have seen will now try to stabilize, that we could see a new cycle to the upside in December next month, then commodity currencies could do well. Euro Aussie could see to move lower. I think that this was quite nice retest of the 61.8% here, around 1.815 level. So as long as we are below that level, below that recent spike high, I think that there is a chance for that we'll see move lower. I also like the idea that this was a very sharp reversal, but this current pullback is just very small but quite long in time, so it looks like it fits perfectly to a potential correction. So it's a just longer breather before we get maybe another push lower here. Now let's take a look on dollar yen. So dollar yen, as you know, keeps moving to the upside, and this one recently broke even out of this channel, so looks like that we could even see a retest of that high. So as you know, I was looking weeks back for potential ending diagonal here. Fortunately, we didn't get any kind of a real sell-off that would confirm that we are topping out, and now just have to respect what the market is doing and maybe just trying to focus on the next resistance levels and upward projections here. So I think that this one is pretty important one here from January 2025 highs. That's the first resistance, and then the next obviously is this 2024 high. So we are moving closer into that area, probably that could be retested by the end of this year. We know that BOG don't want to make a lot of comments lately on the FX rates, but we can be quite sure that they have eye on them, and if the Japanese yen will just fall way too much, of course it will have an impact on their inflation. They will again try to use their tools maybe to shift this trend around, like, as you know, what there was their rhetoric back in 2000 and for most of the 2024. So I'm just wondering if maybe we can get some similar play here in a few weeks. Now looking at German DAX. German DAX, as you know, is also making a pretty nice retracement, but so far it would be maybe too soon to say that we are making any kind of a really important top. We are still basically just trapped in this some kind of a more time extended range, I should say, and we recently came to the downside towards 24 3K level. There's also the second bit support at 22,500, and then you have very big level here from April of this year, you know, around 21,500. So these are two levels that I would focus on. Is suddenly we get even deeper here, but at least for now, I think that this first key level that we're tested it right now is quite interesting. If we get a rebound here, I think that there could be some nice still opportunities to join this trend here. But for now, we are just not really seeing a confirmed reversal, because we just are testing some resistance levels here, especially if you will zoom this in and go to the smaller time frames. Maybe you should pay attention to these levels as well. So you want some more stable price action to the upside to make sure that we are finally bottoming. Okay. Looking at crude oil, well, as you know, firstly, crude oil still made this nice rebound, these Russia sanctions. Then this choppy price action occurred, and even more weakness showed up, because there is some plan that maybe we could see end of the war between Russia and Ukraine. So that's why we have seen this push to the downside. But there were always ups and downs and turnarounds on big stories like this. So I would not be really surprised if we just stabilize now this here in this week, and then we see some push to the upside closer to $60 per barrel, which is still my primary view, that we could see a turning point here while the market is trading above that level. If we break $56, then obviously my wave counts, my predictions here are wrong. But for now, it looks like that these levels, fib levels, are still quite important here. But of course, timing, it's also important here, and maybe we get or should get some kind of a rebound this week. Now let's take a look also on metals. So metals, gold, silver didn't go far recently. Just another indication, because volatility slowed down a bit here. Just another confirmation that we are in corrective phase, and the traders, investors not really convinced what to do here with this kind of a price action, especially after this massive recovery and then a sell-off. So I think that market could now try to build momentum for the next potential push to the upside, but of course this can take time. And from an Elliott wave perspective also, it doesn't look like we are coming to an end anytime soon. Keep in mind that this reversal down from the 61.8% was also impulsive on a smaller scale. So I would dare to say that we could see more complex, either triangle or even deeper flat, or maybe even WXY. But either case, I don't see this correction finished here. So be aware of more weakness, especially if we retest maybe slightly higher resistance levels for this week. I think that 4150, 4160 is something to watch for. Okay, because if you zoom this in, if that was a 5 waves down, then this counter trend rally could see some limited upside here. Okay, so maybe at the beginning of the week or mid of the week we see some push higher, but then Thanksgiving holidays, as you know, market could go sideways and slow, especially because of the end of the month flows as well. Market will then reposition themselves for early in December, and maybe that's will be much better timing for to look maybe for some kind of opportunities here. Also, guys, let's not forget, please press a like if you're or subscribe as well to our YouTube channel, especially if you're a first-time visitor here, so that you will help us grow the channel here. Okay, now let's take a look on the cryptocurrencies. So Bitcoin, as you know, has seen, let me grab some water here. Bitcoin, as you know, has seen a very strong sell-off recently, and what we see so far is that market is most likely trying to liquidate a lot of traders that been on the long side, not only short-term traders, but now also long-term holders with this kind of a deep retracement. Because anytime when you see such a deep pullback, as you know, market, even no matter what everyone is saying, market is concerned a bit, and that's what is happening right now. A lot of liquidations occur, so market has to clear them out before we can finally again stabilize. And unfortunately, I do not see any kind of a completion of this bearish pattern just yet. We could maybe stabilize now for a few days, but then I would most likely expect that we will see another push to the downside, either for wave 5 that belongs to wave 3 or wave C. Keep in mind that each leg can be an impulse, right? So it means it should be subdivided by 5 waves. So as long as we are trading below 99k, or maybe we can even say 100k, because it's a very big round figure. So as long as we are trading below that level, there is still a downtrend. You know that this level has been it's on everyone's eyes, and I think that it's like a pivot level, so it definitely could limit the upside, and I would not be turning bullish unless we see this level broken. So if we have to respect the wave principle itself and looking for some fourth wave or potential upside resistance levels, I think that 90,000 here, 92,000, that's something to watch for. Okay, as it comes to time projection for this wave 4, you can take the distance of wave 2 in time compared to wave 4, and you will came out with dates around Thursday, Friday, exactly when Thanksgiving holiday is in the US, and that's what could possibly change the flows, because usually during this period of the year, of course, there will be less speculative trading activity, and that's what could maybe cause some more weakness when some of the players are sitting on their hands. So that's for Bitcoin regarding the wave structure here. Now, what is also very important, maybe and useful, is now when we have some volatility recently with the moves to the downside, and whenever you're trying to define some kind of a key levels, it's not a bad idea to look at these liquidations heat map and leverages, and you should pay attention to these yellow colors. It means that are the liquidation pools with the highest numbers of potential orders. So we can see that one is here around just slightly below 90,000, but then maybe the most important would be here somewhere around 94, which also could be this swing spike, this swing highs here from the previous smaller degree fourth waves. So if we can see a move into that area, that would be very important maybe to watch out if we just can clear the stops out and then market continue to the downside, because those are the stops from those that are on the short side. Also, this one is quite interesting, net unrealized losses. So more losses we have, okay, it means that more closer we are to the potential support. So this certainly looks like we are seeing some kind of extremes here, especially when you analyze the cycle from the cycle from the start, that's from the start of 2024 actually. So that's a pretty interesting data, but keep in mind that if you zoom out and if you think that we are in the higher degree corrective cycle in Bitcoin, then this one could move to much more important extreme levels. But at least in the short term, if someone is looking for some short-term rallies, this could certainly trigger some upside here. Also looking here, short-term holders as well that are selling at the loss. Okay, there you can see that a lot of them were selling at the losses here with these spikes. So value below 1 suggests that there are a lot of short-term holders that are selling at the loss, and this has happened just recently. Okay, so that's why again we are seeing this kind of a stabilization and some rebound, but how long will this last, it's yet to be discovered. Now also this one is important as well. You can see the exchange outflows. Okay, so this looks like a very juicy, interesting data. Well, but if we consider what exchange outflows means, well, exchange outflows means that a lot of traders, investors are moving their funds from exchanges to private wallets. So what this means? It means that they are confident that Bitcoin will rise. So in other words, a lot of traders are very confident about the potential bull rebound on the Bitcoin itself. Okay, but unfortunately, as you know, at the tops and bottoms, the most important is sentiment that can drive or turn the price around. So I think that it would be much easier for Bitcoin to rebound if there would be less traders, investors that would be confident about the potential rebound and turn in price here. So now if everyone just want to have their Bitcoins in private wallets, it means that everyone is bullish, but market will not be that easy on them and reward just everyone. So what I'm afraid it could happen is that price will try to come even lower to liquidate at least some of them who bought here, okay, who transferred from exchanges to private wallets. So market, it would be much easier, as I said, for market to rebound if some of them would be out of the market, and this could happen if we see a next push to the downside on Bitcoin. And for that, it's very useful maybe to look at the exchange inflows. So in other words, when these exchange inflows will move to extremes, that's when the real extreme pessimism will be shown on the market, okay? Because then anyone who is owning the Bitcoin on the private wallets will want to sell them on the exchanges, okay? Because they will be afraid that market will go, I don't know, back down to 20,000. So whenever you will see this kind of extreme readings in exchange inflows, I would be much more confident to say that we are closer to potential bottom. So with this data, of course, everyone is looking now to hold the Bitcoin, which is fine longer term, but for the short term cycles, maybe the Bitcoin price itself will try to press them a little bit lower so that some portion of those traders, long-term investors, will be out of the market, so that it will be much easier based on sentiment that market will rebound later. Okay, so I will definitely keep an eye on exchange inflows, very close eye in the next few weeks. It really depends. If we see another push to the downside, obviously on Bitcoin, then this data could be important. Now, looking at the Ethereum, this one also is still testing, sitting on this 61.8%. Also, we had some very nice technical support as well. If you look back here of May and June 2025. So if we can see some solid rebound, this could maybe even offer some opportunities, early opportunities on the Ethereum. That's definitely one coin that I would keep a very close eye if suddenly all cryptocurrencies would see any kind of strong rebound. And if this one can recover back up beyond this trendline resistance, then I think it would be quite interesting to look for potential opportunities, maybe even, of course, I'm talking about the some intraday setups here to join this trend. But for now, it really doesn't look like we have a low in place here. It's just a poor speculations. But at least the price action itself here is telling us that at some point we should see a rebound because of an overlaps. Even if you think that that's some kind of a leading diagonal, you could expect some rebound as well here. Looking at Litecoin, this one has recently came to the downside. If we will draw the trend lines here, okay, it broke quite decisively below that trend line. And whenever this happens and you have only 3 waves left behind, it means that most likely we are just in a higher degree corrective cycle here. So in such cases, it's good to maybe to zoom out and let's see what happens on a big charts. And you can still see here that the price is actually trapped in a triangle. So I think that this triangle will at some point still send the prices to the upside, but maybe it will be much easier when we will be in a crypto bull phase. Unfortunately, that's not the case right now. So if this consolidation on cryptos, especially Bitcoin, will last longer, maybe this one will just chopping around here. But then maybe in 2026, the second half, if not earlier, we could see some interesting rebound. But for now, unfortunately, we are just compressing the price here, and it looks like that more time is needed before we can eventually break higher, which I think it's possible. Now looking at Ripple, this one is showing much more interesting price action, especially when it comes to the current developments. This one has seen some very nice rebound from that previous support. We also, as I believe, we just recently tested the 61.8%, and so far this looks like a very attractive rebound. So maybe this one will see more upside and could be one of a few that will have a very clear wave structure, maybe that will try to drive the prices higher. While maybe Bitcoin itself, or maybe even Ethereum at this point are not looking that clear. And also the final one that I want to take a look is Solana. So I posted this Solana as well 2 weeks back on X, and said that I will keep a close eye on 2 support levels. So recently we just tested this first support levels around 125, which came in play after this drop out of this upward channel. But keep in mind that this first leg was a very sharp one. Okay, so this certainly looks like an impulse, and also market will make more free wave corrections rather than triangles. So that's why I think that the first wave count or interpretation that we should focus on is potential to see an ABC drop. But if these levels will hold here around 130, and then we see a rebound here, let's say in the next few sessions, few days, back towards 180 or so, then of course triangle could be also one of the ideas. So but overall it looks like that we are here in the middle of a wave 4, and that the next even lower support levels, if we retest it, could offer some very interesting longer term opportunities here. So I think that maybe in 2026 Solana could do pretty well and see that rebound. But I firstly maybe want to see what will happen on Bitcoin if we really get maybe that final leg to the downside here into wave 5, and then maybe after we get this another new dip, once we get this rebound, another new dip, then you know that more liquidations will show up here, and that what could cause maybe later reversal and will impact also maybe some other coins as well. Okay, traders, I hope that you enjoyed this presentation, this webinar. Also, let me not forget to mention that, as you know, Black Friday offer is now officially live. So if you are interested in more of these analysis and our charts on a daily basis, make sure to check it out. You will also get our Elliott Wave educational school videos for free, and hope to see you in our chat room. Traders, be careful this week. If you are celebrating, enjoy the Thanksgiving. Keep in mind that markets are closed on Thursday. They will close early also on Friday in the US, of course. So trading conditions could be a bit thinner, and maybe you should also consider how you trade during this period. Traders, good luck and talk to you soon. Bye.